Lane Kasselman, president at blockchain.com, one of the very early employees of Uber.
I'm not an engineer. I'm actually a lawyer by training. Taking a chance and going to Uber before it was anything. We would launch in markets, we would launch for free, we would do fun promotions, we would deliver ice cream on demand. We would do all of that stuff to win the hearts and minds. But that idea that you have to win or you're going to lose has carried throughout my career. And in fact, is some of the culture that I brought to blockchain. So when I joined blockchain, it was about 100 people. And within a year, we were at 600. It's the Blockchain Explorer, our original product, which is like a search engine for crypto and is one of the original sources of data in the crypto ecosystem. We can see transactions and you can see the rate of sort of anything on any of the sort of top 800 blockchains. For the most part, are real businesses. Like they may be our competitors, but that doesn't mean they're not real businesses and we don't actually believe in what they do. So I do think the next market crash will not be as severe. If you don't have regulations in place in your country for crypto, you should.
How do you see your role and what challenges did you face over this journey? Good morning, good afternoon, good evening, dear friends. I'm Viktor Orlovsky, and this podcast, Ventures from the Valley, is brought to you by R136 Ventures. We have an exciting guest today, Lane Kasselman, who is the president at blockchain.com, one of very early employees of Uber, and an awesome businessman, leader, who says that he builds a career by making things happen. And he's a Californian, so that is self-explaining, I think, for people out of this place. So Lane, welcome, and thanks for joining us.
Well, thanks for having me. I'm really glad we're doing this. I've been watching the podcast and listening to it for a while, so I'm very happy to be a guest.
Thank you very much, Lane. So we are proud investors in blockchain.com, and obviously we'll speak business and like evolution of business. But let's start with like your journey first. You are not a software engineer, aren't you? What's your background? So how you ended up falling in love with technology, which you explain or like quote that tech is for brave, especially in the moment of increasing regulation. So you are kind of in between tuning regulation towards technology and technology towards regulation. So how did you end up doing what you're doing?
Yeah. Well, really happy to chat with you about that, especially because I think my journey into tech is a bit non-traditional, because you're right, I'm not an engineer. I'm actually a lawyer by training. And my career started in politics, right? So I was a lawyer, but decided that after practicing briefly in securities litigation, that it wasn't really for me. And so my first love was always politics. So I went back into it. I had the good fortune of working for some pretty high-profile elected officials. And I did that run for several years. And I think that really helped cut my teeth, as they say in politics, of being a utility player, right? Somebody who can jump around and context switch pretty quickly across very different subject areas. That led me to very early on getting a job at AT&T, where this is many years ago. AT&T was trying to put cell towers basically in everybody's backyard, right? This was during the explosive growth just after the iPhone. And they needed somebody who could convince local governments and local communities that it was a good idea. Because I don't know if you remember, but right after the iPhone came out, nobody wanted cell towers anywhere. And there was quite a few revolts all across the country. So AT&T hired me to do that. Turns out I'm pretty good at convincing people and communities and elected officials about the benefits of wireless infrastructure. So I was a young executive at AT&T. At the time, I was one of the youngest. But also during that time, I ran into something that I'm sure is common to your viewers, that it was corporate America. And it's pretty hard to move up in corporate America. And so if you're young and aggressive, it's not the most enjoyable experience. And so, I started looking around. And when I had worked for the mayor in San Francisco prior to AT&T, I was his appointee to the taxi commission. And I really disliked the taxi industry in San Francisco. It was expensive, it was unreliable, and the cars themselves were just really, really bad. And so I heard about this upstart called Uber, and they were basically an illegal taxi company. And so I kind of reached out through my network to a friend of a friend that worked there. And they were looking for somebody like me, somebody to help convince communities and local governments that a new competitor to the tax industry was a good idea. So I had no idea what it was going to become, right? I think when I interviewed, there were maybe 50 employees. And when I joined, there were about 70. And it was just sort of us against the world. We were very much an illegal taxi company. And it was because I wanted a different challenge, and I was just sort of frustrated with my growth at AT&T. So that really changed everything, right? As you know, everyone knows the story of Uber well. I ended up leaving once there were 6,000 employees. I ran communications and policy globally, and it really did indoctrinate me into the tech sector. And so things sort of grew from there. But that's really, I'd sort of say, how I started in tech was just kind of taking a chance and going to Uber before it was anything.
Well, and certainly Uber was a challenger, and it was kind of like trying to find a niche between, or a spot between, like heavily regulated taxi transportation industry and what is possible to do, like without breaking the law, right? And I remember I met Travis Kalanick, I think back 2014, and we were also proud investors in Uber in our Fund One. So we captured both of your companies, blockchain and Uber. And Travis, like one of my colleagues asked him, what is like the corporate culture in Uber? And his answer was somewhat brilliant, as many of his answers. He said, can you imagine the total chaos on one side and a total order on the other side? And then there is a tiny, tiny, tiny line in between. So that's what our corporate culture is all about. So maybe you can just give a little bit of perspectives to that, and how you like shape this culture. So you were one of this very early employees, and I'm sure you were like one of top, like first 100 employees from what I remember, right? So, and since a bunch of them were engineers mostly, so you were like one of very few executives back then, right? So maybe you can just give us like a little bit of this evolution of like a culture, but also the way Uber really won and celebrated cities, and how this like legal framework evolved, and how much of that was like a real legal, and how much was a publicity and advertising and marketing and PR that helped you to shape what Uber is today. So if you can little deep dive into this.
Yeah, I love that you had a chance to meet Travis in the early years. I think, history is sort of, written a story about him that isn't totally accurate, because, the Travis that I know and that I worked with is pretty amazing, right? Everyone knows the visionary, but he's also just a great colleague. And I think I learned quite a bit from him by being able to, I sat across from him for the first year. I think that, there was a mindset at Uber that we had to win. It was very binary, because if we didn't win, we lost, and there was nothing in between. And we were going up against an incumbent industry that's extremely well organized and extremely well funded all around the world, right? The taxi industry, I don't want to call them corrupt, but they are certainly well ingrained in governments around the world, or at least used to be, and extremely well funded, and had shifted laws to support their industry at the detriment of competitors over decades, and in some cases over 100 years. And so because of that, we had one option, and that was to win, and to win at all costs. And there's been lots of stories about how Uber kind of invented the ask for forgiveness type of strategy, which is no longer popular with startups. But that really was how we approached operating. The theory was, if we could convince large populations of people that our product was superior to what was currently available, regulation would have to catch up. Elected officials would have to catch up. But the trick would be to convince the customers. And so that was the strategy, right? We would launch in markets. We would launch for free. We would do fun promotions. We would deliver ice cream on demand. We would do all of that stuff to win the hearts and minds. And sure enough, we were right. Regulation caught up and realized that it was better to support what it was their voters wanted than to defend a dying industry, which is the taxi industry. But that idea that you have to win or you're going to lose has carried throughout my career. And in fact, is some of the culture that I brought to blockchain. I think there's a lot of companies today that have a great product idea, right? And the entire company is built on this really great product idea, and they want to deliver this product to their target customers. And that's great. I've been a part of several of those companies. But some companies, every once in a while, have the idea that their job is to win at everything that they do. And maybe they have multiple different business areas. And the companies both that I've built and sold and been a part of and now blockchain, they all have that same idea, that same type of culture, which is we're not doing one thing really well. We're winning in an industry, which means we're doing a bunch of things really well. And I learned that from Uber, right? You can think of Uber as being one product, right? Press a button, get a car. But it was the first real three-sided marketplace. And very quickly, it wasn't just press a button, get a car. It was press a button, get a burrito, press a button, get your package delivered, press a button and have a semi show up and ship your goods for you. It got very diverse very quickly.
I think that that's the notion, which I just like this Uber advertising the other day. I just heard it on radio, I think, that it's like a friend, like Uber is a friend which is nearby. So which takes care on you whenever you need it, right? No matter what you need, like a gift or a flower from your loved one, or like food to eat, or a car to ride. And I think that's the great notion of like a friend rather than just a delivery company. But let's switch a little bit further. So obviously, well, now as a president at blockchain.com, you are shaping the crypto market overall, and blockchain is definitely one of the largest players. So how does your experience in Uber shape your like the way you built in this heavily regulated category like crypto? If you can like compare like from 0 to 100 scale, crypto would be at probably close to 100, while Uber will be close to 10 on the regulatory scale. So maybe you can just give a little bit of like insights of how you feel about like moving to crypto. What brought you to crypto? When did you buy your like first Bitcoin? And how you decided to like engage in crypto more broadly?
So shortly after I left Uber, I was fortunate to take some time off, and I was, visiting with friends and thinking about different.
When was it? When was it?
That was the beginning of 2016,
2016.
and I was, fortunate to just be able to meet with different companies and sort of explore other opportunities. And I had a friend through politics that was running finance at blockchain.com. And he said, we're doing something pretty interesting over here. Why don't you come out to New York, meet the founders, and we'll tell you about what we're doing, and maybe you'd be interested in joining us. And at that time, blockchain.info was, I think, about 15 people. It's quite small. And so I flew to New York. I met the co-founders, Peter and Nick, and also first employee, Matt Tuzzulo, and also, my friend that was working at the time, and a few other employees. And I sat down with Peter in the New York conference room, and he kind of sketched out everything sort of about the fundamentals of Bitcoin and crypto. And it was interesting. And I remember saying to him, and he brings this up often, that, I didn't really believe in his fake internet money thing, but they seemed like nice guys, and I think I could help them. And so I offered to advise. And at the time, the company was really focused on remittances and interested in setting up Bitcoin ATMs across Latin America. And there were some regulatory challenges with doing so. And as the months kind of went by, I was advising, and then I ended up setting up a consulting firm, and I was able to actually take blockchain as my first client. And over the years, I worked with them through not just political issues, but communications issues, executive leadership issues, product strategy issues. And I really became an advisor to Peter and the executive team. But all throughout building another company, selling that company, working at another company, I was always involved with blockchain. And so it wasn't until we were in the midst of COVID, and I was starting to get the itch to really do something a bit more entrepreneurial. And I was working on building another startup. And Peter Smith, the founder of blockchain, was advising me on my startup. and was going to invest in it, be one of the seed investors. And I had a setback. This is towards the end of 2020, and that the co-founder backed out, went to become a VC. And I remember Peter saying to me in that January of 21, if you really want to go build a company, why don't you come to blockchain, and I'll give you the ability to help lead it, and you scale it and get us ready to be the next stage in our development, and ideally to get us to being a public company. And so, I'd been on the periphery for years, and I thought, this seems like a great idea for me to come in-house. And what had happened in those intervening years since when I first met Peter and coming in-house is that, my philosophy around crypto evolved because I ended up having more companies as clients in crypto. And I saw something super interesting, and that was less the speculative investing aspect that sort of has been predominant in like the US, but more friends in emerging markets or markets that have some sort of challenge with their financial system. Either their currency is hyperinflationary, or they have a banking system that isn't trustworthy. And I had actual friends that I'd worked with at Uber that were engineers or founders and living in like Argentina or Brazil, and they were unable to really find any kind of safe store of value for their salary. And they were shifting to crypto because even though it was volatile, it was more predictable than say the value of the Argentinian peso. And that was when it clicked, right? Was that in some markets, crypto is actually a replacement for fiat or for TradFi, because those markets just forever have had a very fractured and challenging financial system. And so that's actually what took me over the line was seeing it in use to really help people have a safe store of value. Then I got deeper, right, and started to understand the investment value of the utility and just how beneficial it can be to what we're seeing now is being the underlying layer of value transfer for so many systems. So, it took me a while. I will admit, and everybody knows this, like I'm not crypto native, and I didn't start out as a true believer. I had to learn it and come to it later. But I definitely, took that journey across about 5 years, and then got there and certainly believe it's strongly now. As to when I bought my first Bitcoin, I think it was probably right after I met Peter. And I remember he is famously always betting people that things he would know he would win, and you would have to pay him in crypto. And so it forced you to buy Bitcoin. And back then, in like 16, 17, to actually get Bitcoin was kind of a pain and was expensive. And so you ended up just like having a lot of it. So it was Peter. Peter was the reason I ended up buying it, but I think it was probably around like 2016-ish.
Yeah. Okay, so you said it was expensive, nothing to compare it with today's value. So
it was more
wise,
like
wise offer by Peter, for sure.
I think to like, if I remember correctly, to buy, $100 worth of Bitcoin would cost you like $130, right? You paid like $30 in fees to do that.
Yeah,
it was so expensive.
Yeah. It was ridiculous. I agree. So we'll speak about future of crypto, and certainly I share with you, like I traveled this fall through LATAM. I have been to a few countries on just crypto adoption, and was watching for like different startups and talking to businesses. And I was like really surprised by seeing like real economic businesses like rent a car or legal firms who have like the entire balance sheet and P&L, maybe 90%, up to 90% comprised of crypto, mainly stablecoin though. So they actually, this company I referred to, my friends, it's like 10 years old rent-a-car firm in Buenos Aires. So they rent cars for themselves, like lease cars, long-term lease in crypto, in stablecoins. So they pay stablecoins. That's their main asset. They pay whatever real estate rent, stable coins. They pay salaries, stable coins, but they also accept rent rental fees in stable coins as well. So it's basically like they never go off ramp on ramp. It all goes in stablecoins for so long already that they got used to it. So like it's amazing how these economies like Argentina have matured into like a perfect product market fit for stablecoins and crypto. So yeah, people are like paying, spending money, buying food, stuff, whatever, like groceries, doing haircut, whatever. It's like all in crypto. So that's real adoption going on, and I think that well, developing world will get to this crypto native economies much faster. And we are obviously doubling down on this sort of things, investing in companies like that. But let's get back a little bit in the history still. Blockchain, you said that it was startup back in 2016. And now it's a company that is matured enough probably to go like the next phase of evolution development. It's definitely not, well, in a common sense of that word, is a startup. So how did you help them to actually mature into this solid, well-established company from like being crypto enthusiasts and being like this crypto, you know, um, well, pretty speculative nature of a startup. So, and it was, I think, not an easy thing to do, right? I mean, it's like, yeah, it's something what is difficult to build in so ever-changing environment. But people who haven't got used to build bigger and more established companies. So how do you see your role and what challenges did you face over this journey? And what worked out, what not, if you made? So if you give any advice to startups younger than and less mature than blockchain, what this is going to be?
Yeah, I think that's it's a great question, and thinking back on sort of what I intended to do and what I ended up doing were probably a bit different. Look, there are several books that have been written about how to scale a company in Silicon Valley, right? And it would be challenging to sort of paraphrase all of them, but I definitely have read them, right? And so I certainly had an idea about what I was supposed to do when I came into the company. The first thing was really just coming in with fresh eyes and walking around and identifying what just didn't make sense to me and what didn't seem like it was working well and where there was obvious opportunity for growth. There is this sort of myopic tunnel vision that ends up happening with most startups. And I've worked with many over the years before I got to blockchain, where the leadership team is very focused on, the product or a couple of specific issues, but they're not really thinking about what it looks like once they're beyond those issues or those problems. And that just generally comes from experience, right? It's sort of a lack of strategic vision. That's an experience issue, right? It has nothing to do with their capability. And so when I came into blockchain, I noticed a couple things. One was the executive team was extremely small. And more importantly, the executive team really didn't have a very wide breadth of experience across industries. And while, you definitely want people who understand finance and understand crypto, it does hurt you if you're only recruiting from your specific industry. You don't benefit from the learnings from others. So one was a leadership team. And so one of the first things I did was identify where we needed to grow. And we needed to really add capacity, like experienced senior capacity across engineering, across product, across legal and compliance, but also marketing and customer success. Each of those divisions needed to have people who were experts in their field and not just battlefield promoted from inside the company. So, I definitely, caused a couple of ripples when I first got here because I was, layering people and I was bringing in some pretty senior talent who had their own ideas. And so the next sort of step was then implementing this idea that you hire experts and then you trust them to do their job. Right. And so startups have to move from this idea that the senior execs basically manage every process of the business or, micromanage every aspect of the business to hiring experts, giving them a target, and then trusting them to hit that target. And that took a little while for the existing exec team to get used to, right? They had been used to sort of, knowing everything that was happening, every aspect of the business. And so it took a little bit of time to get everybody comfortable with the change. And then you really have to scale, right? You need to figure out where to add capacity on your team. So when I joined blockchain, it was about 100 people. And within a year, we were at 600, right? And there were multiple ways for us to grow. We accelerated on hiring, but we also did a lot of M&A. And our business was growing extremely fast, and we were starting to fracture under the weight of just not having enough people, enough bodies to handle the amount of business that we were doing. I think in 2021 we did top line of $7 billion. Like the company had gone from a couple $100 million to $7 billion in a year, and that was not uncommon in crypto, but was didn't, just because it was happening all across crypto didn't mean it wasn't extremely challenging for us to absorb that volume of business. And so, it was, kind of identifying all of those needs and then also offering leadership on how to do it. One of the most important, I think, evolutions that a CEO can make is realizing that they need to bring in a number two who can really give them maximum leverage. So, my first title at the company was Chief Business Officer because we didn't really know what exactly my scope was going to be. And I was trying to model it after a meal at Uber. And what we quickly discovered was that, yes, I had some clear plans for how to scale the company and I was implementing them. But more importantly, I was giving Peter, our founder and CEO, leverage by taking over big chunks of the business that he had previously run so that he could focus on strategy, vision, product. And I could start giving him the ability to not spend all of his time managing day-to-day operations or aspects of the business that really didn't need his influence anymore. And that's a pretty big moment for a CEO to do that. And fortunately, he and I just, had known each other for a long time, and he trusted me, I trusted him. And so in the 5 years since, that partnership has worked pretty well. So, when I became president, it was a recognition that I was really going to start leading, big chunks of the business. And the way we've sort of divided it up is that, Peter, as the founder and the CEO and the visionary and the real financial engineer behind the company, is very focused on engineering and product and our trading business. But then all aspects of the business that are related to our day-to-day operations sit with me. And we just, we talk a million times a day. But it was really figuring out that sort of split was going to be the best way to run a truly global company. And we figured that out within the first sort of month that I was here.
That's fast, really. And talking about like leadership and your philosophy as a leader. So you, I think, said like a few times, at least I saw it in your blogs, in your posts, that the executives are starved for mentorship. So it's not easy to actually mentor executives, especially self-made entrepreneurs like Peter, and obviously many people who work for you. So how do you like operationalize the day-to-day activities with your like direct reports? So it would be like interesting to know how you like build your day as a president and in fact like a CEO in the business, right? So you're just taking care of a lot of stuff in at blockchain.com. So what does it look like? I see a screen behind yourself with like a lot of like charts. I trust this is something something has to do with the business, right? Like
it does.
Blockchain metrics.
It does, yeah. It's the Blockchain Explorer, our original product, which is like a search engine for crypto and is one of the original sources of data in the crypto ecosystem. We can see transactions and you can see the rate of sort of anything in the on any of the sort of top 800 blockchains. I think behind me is current hash rate. But to your question, I think figuring out how to properly lead a team and how to mentor them. You can read books, right? But I think good executives and good leaders aren't born. They learn it both on the job, but they also are focused on developing the skill set themselves. And I was fortunate to benefit from having some really strong, skilled, and impressive CEOs and leaders that I've worked for. But then also I have founded companies. And so I've sort of been through it myself and figuring out how to build a business, lead a team, and inspire a team. So with our team, I think there's sort of three three ways that I'm able to mentor them and help them continue to grow. One is, I model the behavior that I want, our team to emulate. And that is, from how I do my work, to how I prepare, to how I lead a team, to how I engage in a conversation, to how I respond to problems. And my job today is basically dealing with problems all day, every day, and making a decision that's, between a bad decision and a worse decision, right? Like it's really all the easy stuff gets done before it gets to me at this point.
To separate a noise from a signal, more or less.
Correct. So that's one. And then the second is, I have a couple of like tenets of leadership that I make everyone on my team very well aware of because I say it all the time. One of them is we all do windows, we all do floors, right? And that idea is, it doesn't matter to me whether you're the CEO or you're the intern. If there is a need in front of you that needs to be done, you do it and you figure it out. So if you're an intern and you need to get on the phone with an investor because nobody else can, then you just figure it out. Just like if you're the CEO and you need to sit down and you need to write a blog post for the company because nobody else can do it, you do it. And a company should never be so siloed that people won't do and won't take care of a need in front of them just because it's not necessarily in their job title. That's one. Two is what you have done before isn't predictive of what you'll do in the future. So I tend to hire people who are really good at whatever it is they've done in the past, but I may hire them into something that's completely unique. I am an example of that, right? I was a communications policy person and now I'm running a crypto company. Like on paper, it doesn't necessarily make sense. Then you drill it underneath and I was a VC and I went to Stanford to learn how to be one and I started doing M&A and I built companies. But when you sort of look at, what you can find publicly available about me, like it doesn't seem like my background necessarily is somebody that should become someone running a crypto company. And I don't necessarily hold people just to their background, right? I really look at the character and the qualities of what they produce. And then, the last one is just, I think probably, one of the most important, and that is, it doesn't matter where you are or when it is. I don't really think much about how you get your job done as long as you get it done. So I tend to focus on outcomes and not on process. So I really want my team members to be focused on whatever it is we've asked them to do and whatever the big goal is for the company. And I don't want them to get bogged down in process. And I don't want to be the person dictating process because everyone has their own way of accomplishing their needs and their goals. So, that is, a pretty important, tenet of my leadership. And then I would just say, lastly, I think it's generally, pretty important to make sure that you as a leader always are improving yourself. And so I have an executive coach. I'm not, I don't think I'm a perfect executive or leader in the company at all. Mm-hmm. And so I have a coach that I work with every other week and have mm-hmm. for 6 years. Mm-hmm. He knows me extremely well. And my conversations with him range from tactical about issues I'm dealing with at the company and figuring out how to navigate them to, leadership skill development that he is pushing me towards. And I credit a lot of my success with having somebody who, looks at my work and me objectively and that, has no stake in the company or in the company's success and is really just trying to make me better. I think having an executive coach is critical. And so I've, instituted that across the company for most of our leaders.
That's amazing, really. And that's so like important. I totally agree with you that somebody has to watch you. And it's like a little bit of like looking at yourself from like from a side. I just value these conversations a lot myself, and I'm mentoring my team, but also want to be mentored. So I think that's essential and very important part of my growth trajectory to really bump on someone who can give me like an honest feedback of what I do right and wrong, right? And that's how you can learn, because I think that that's the biggest probably issue with the executives, is that they fall into their own traps and beliefs, right? And become like victims of their own kind of self-made kind of mindsets in a way, right? So you have to always just try to like jump out of your own box and vision. So we are half the way now. So we spoke a lot about past and presence, and I want to speak next half about future. Let's split it into like future of crypto, future of regulation and adoption. So maybe we can start with regulation side, regulation part. There is a lot going on in the US now and in the world on regulatory adoption. And I think that it's more positive than negative for the industry. But I would like you to explore this next wave of regulatory adoption. What needs to be done for crypto to become like every day, everyone's payment vehicle, store of value, and being like a vital part of economy. Now it's still like a tool, at least for me, in most cases, speculative tool for people who try and want to like make money, like immediate money, a lot of money, and not a real tool with which you can just do everyday payments. So obviously there are some technological challenges, which to my mind are mostly overcome. But if you can like speak a little bit more deep into regulation and what needs to be done on the regulatory side to make this tool thriving and people really adopting it at an even higher pace.
Well, fortunately, we're at a very promising moment on the regulatory landscape, and that is true around the world. So first, we a year and a half ago got a permanent framework in the UK. Then the EU passed a framework called MiCA, which comes in force at the beginning of next year. And multiple US states have a framework under their MTLs or money transmitter laws, with more states being added all the time. And then you've got the US federal government, right, which has really been kind of like the last outlier. And that question has largely been answered. First, we got stablecoin legislation done, and then market structure is working its way through Congress, and I'm confident we'll see it next year. But more importantly, that bipartisan leaning into crypto in the US has really sent a signal around the world that if you don't have regulations in place in your country for crypto, you should. And so we've seen it in places like Nigeria, where crypto was very much in conflict with the government, to now there's a regulatory structure. And we're seeing this play out in multiple countries around the world. So that is an impressive development that, call it 5 years ago, crypto was still largely illegal and questioned in multiple markets around the world, to today, there's a permanent framework all over. And that gives investors and users confidence to enter the space. We've been quite active on the regulatory side in the EU and in the US, because we have such significant market share in those places. So, we have helped to develop laws, craft them, and drive for adoption. And I'm so happy that it's been effective. It hasn't just been us, right? There's been multiple players involved. Our colleagues at Coinbase as well have been really, really helpful in sort of making this happen. And I think where we are today is these frameworks are permanent, right? So crypto is here to stay. It's not a question of if anymore, right? Now it's how. And so I think to your first question about kind of where does this go from here, right? So, first it was an idea with, small groups of people who were supportive, and use cases starting to develop, and some big stumbles along the way. We had the big crash at the end of 22 and 23, which really swept out the underbrush of some, poor quality companies, to now where we have a permanent framework and crypto is accepted. So what happens next, right? And I have theories, right? We have theories of the company. We don't know for sure. But I do think it's important to think about the crypto ecosystem broadly into sort of two categories. And that is emerging markets and then everybody else, right? Mm-hmm. So the emerging market story is, the example that I gave you and the one that you've seen firsthand yourself. I think in emerging markets, crypto does end up replacing a lot of fiat activity. And we see it in our data, right? In Nigeria, for example, our customers there, they are using crypto for daily payments, right? Going to the grocery store, paying the babysitter. For them, it is a more stable currency than the Naira. And I think we will continue to see that dynamic in emerging markets all over the world. And once that starts, you can't put it back in the box, right? Like it is definitely a permanent development in those markets, which is good for our business, and we are very forward facing on emerging markets and have a pretty strong presence in those markets. So I don't think that changes. But those customers aren't necessarily using crypto for the reason sort of the rest of the world is using crypto. So we have seen certainly in Europe and in the US a lot of you can call it speculative investing, right? It's basically like buy a cryptocurrency and hope that it goes up. That is evolving into an investment tool, and companies like ours are starting to add products into our wallet that help customers invest, right? We launched an AI product called June, which is privacy first and crypto enabled, so that it can help our customers start making more educated decisions about crypto investing. And I think you'll see more investment grade tools built into crypto products to really help people do more than just speculative invest, right? We do think it is a more sustainable investment tool. I think the really interesting way that most consumers are going to interact with crypto, they don't even realize it. And that is this idea that right now we have lots of AI tools that can help you do purchase identification, right? So if you want the cheapest or most efficient airline ticket to get from point A to point B, you can have an agent help you find the efficient route or the most affordable ticket, or you can apply that to anything, a consumer good.
Expedia,
right?
I don't know, you just go and do it like through the tool, right?
That's right. So you have the tool do it for you. But what the tool is not yet doing for you is executing the transaction, right? That's not 5 years away. That's actually starting to happen right now. And I think it'll start happening more broadly for consumers very soon. And so then the question you have to ask is, if your AI agent finds a product for you, you're in the United States, the product is in Brazil, and the agent's going to execute the transaction, right? It finds the product for you. It's the best price. It's the exact product that you want. And then it's going to execute the transaction. What is the AI agent going to do to execute that transaction? Are they going to use your credit card? Are they going to have their own pool of dollars? And I think the most likely answer here is that the agent will figure out what is the most efficient means of value transfer. And most of the time, it's going to be crypto. So your agent's going to go out, say you give it $100 for this purchase. You give it the $100 in USD, US dollars. The agent will then go figure out, all right, here's the cheapest, most efficient crypto for me to use in transferring that value to Brazil. And it'll go buy it for you. And then it'll execute the transaction. On the back end to the seller, maybe it converts it. Maybe it just gives it the crypto. It kind of depends on what their agent wants to receive on their end. But the reality is the consumer, the seller, or sort of the buyer and the seller, they probably have no idea that crypto was used to transfer the value, except that will be the predominant form of value transfer all around the world, and it's all because of AI. So I think we're basically there, and we already know the large LLMs are having these conversations with crypto companies to help facilitate this. And you see it, like the evidence of this is like, why is Ripple so valuable, right? Ripple is a great way to do this, right? Why is Circle so valuable, right? Like stablecoins are a great way to do this. And so I think that's actually what's happening. I just think most consumers don't realize it.
Yeah, it's the cheapest way to transact nowadays. I mean, if you do it in stablecoin rather than fiat currencies, that's the cheapest and definitely fastest way to move money from point A to point B. Totally true. Well, my other question here is, you already mentioned that AI and crypto, which is like definitely good combination of like building up something on top of both like trends. I'm sure there will be like trillions of agents, right? Pilots, agents, whatever, working with each other. They would need to negotiate the price. They would need to determine what's the value created and transact, right? And unlike that, there are 8 billion people transacting with whatever hundreds of millions of companies. There will be trillions of agents transacting with trillions of agents. So it will be like a multitude of whatever 1,000x from where it is now, and none of the financial systems are capable of capturing these volumes and micropayments in real time. So obviously, crypto and smart contracts could help here. And there was a lot of buzz and really hype around smart contracts, and I was like a great believer in smart contracts being good for financial industry, something like trade finance, but many more things. And we still see like very early adoption and very low adoption of smart contracts in real economy. Do you have any ideas why this kind of tool, which is secured, guaranteed, stable, self-developing in a way? So if you may combine like vibe coding with smart contracting on blockchain, you can basically build anything you want, right, in a minute without like knowing anything about software development and coding. And still, it's not taking right pace of adoption. Do you have any ideas why is it not happening?
Well, I mean, I think there's probably two reasons, right? So, one is in places like the United States, the existing strategy for financial transfer, the existing tools for financial value transfer work pretty well, right? So like there isn't really a need for smart contracts to help execute transactions because everything else sort of works pretty well. Now there's things that don't work well, right? Like 7-day settlement and all of that. Like there's no dynamic settlement or atomic settlement of stock trades and that type of thing. Like that stuff doesn't work well. But for the most part, like our economy tends to actually work quite well based on what currently exists. And so there isn't necessarily a need in the US for it. And so I think that's probably why you've seen slower adoption on the smart contract side. I think, we probably see more adoption on tokenization. That probably happens faster only because that's probably what facilitates atomic settlement of, whatever stock sales or eventually like property sales and that type of thing. I also think it's, there are sort of too many solutions, and so I think the way that gets sorted is because, or is through sort of individual agents, right? And so I don't know if you know Ilya Poloskin, who's the founder of Near. He was an AI engineer before he started Near, and I think Near does their foundation has like a forum every year where he gets on stage and kind of talks about what's happening in Near, but also he talks a lot about AI. And his videos are amazing because he actually talks about like how individual agents will evolve and what they'll do for us. And one of the most important reasons that we will each have our own agents to sort of engage in both crypto and sort of the AI ecosystem is selection, right? Is selection of which tools you're going to use and how. And so I think when it comes to, smart contract tooling, I do think there's a time and a place for it, but I think, trusting humans to make the decision on which one to use is like not a great strategy because there's selection bias and discovery is impossible. And I think that's probably why agents become so valuable to us. So I do think the efficiency comes once we are sort of at the point that we have individual agents working for us. Again, like I don't think this is a 5-year thing. I think this is like a couple month thing. I mean, if you watch Ilya's videos, like it's already right now. So I think that's probably why it's taken a while.
Good. You just mentioned tokenization, and there was like era of ICOs, very promising, ended up nowhere. Basically, most of the investors and companies lost money. Now there are all sort of discussions going on about like tokenization of real economy, and I know that there is a least that I heard, there is like a battle going on with like legacy players like Citadel, BlackRocks of this world, and blockchain companies on whether to actually go ahead with this new tokenization framework. And this can definitely change the landscape of financial services. Like the whole Wall Street will be reshaped. So do you think that it's ever happening that this new economy will win the legacy and this a new legislation is going to be adopted? And do you think there is any risk in this? And that there will be like a new era of like this ICOs, unpredictability and stuff. So how do you view that?
Yeah, I mean, I think the difference is ICOs were creating a new asset for the most part, and that's really that was their flaw, like trying to tokenize something like a new idea versus just like an asset that could be freely traded. And I think the difference now is most tokenization is based on existing assets or products, and the reason behind it, I think like ICOs were trying to like create something new, whereas like the current tokenization movement is actually just trying to make existing transfer
Mm-hmm.
of asset faster and better, right? And
Mm-hmm.
so I think that there's like the reason behind it is different, and that's probably pretty important. We launched a partnership with Ondo Finance a couple of weeks ago, which tokenizes U.S. stocks and ETFs. And so it gives customers who don't have access to those, generally outside the US, the ability to invest in them through like a synthetic tool. And so, you can't necessarily see it in the UK and the EU because regulation doesn't allow for it. But in other
Mm-hmm.
markets around the world, you do get access to a tokenized sort of synthetic version of certain stocks. Like, that's great, right? Like, why should those stocks be limited to just U.S. Retail investors and sort of international institutional investors? And so I think where this is starting to manifest is I was at a conference a few months ago with a bunch of asset managers, and it was really a conference more about securities and not necessarily pure crypto. But one thing became so clear was that they are frustrated because there is a new generation of investor that's grown up in the Robinhood era who expects instant settlement, right? So they've grown up with crypto, they've grown up with Robinhood, and they are, executing what are often microtransactions, and they don't really have time to wait for things to settle. And unfortunately, like settlement is still extremely slow across U.S. financial markets and certainly European financial markets. And so it was this recognition among these asset managers who are not crypto forward that they need to figure out a solution because they're actually starting to see real friction with new user bases and how they can deliver their products. So I think tokenization is probably the most efficient way to get to this idea of atomic settlement, like real time settlement
Mm-hmm.
for stocks and other assets. This is not blockchain has thoughts on this, and we're happy to support it. But we go as far as sort of offering the end product to our users. It's not an
Mm-hmm.
area focusing on in development. So we're more
Mm-hmm.
just supporters and watching it. But I think it's probably not like an if but a win.
When do you think? Well, actually, talking about like stablecoin, it's a tokenized way of buying T-bills, right? Treasuries. Uh, when do you think I will be able to buy tokenized S&P 500 or other ETF or tokenized Apple? Is it going to happen in 2026? You think? I mean that like every American will be able to like push a button and buy a tokenized uh, stock or any other asset. Uh, so you think it's like coming, and when?
I do. I think you can actually buy some of those on Ondo Finance right now. So yeah, I think it's here. So I don't know that you can get S&P, but I think you can certainly get Apple. So I think it's already happening, right? So
Mm-hmm.
and you can use I'm just using Ondo because it's the one we're partnered with as an example, but I think there are probably other places you could do this as well. But if you want to diversify your portfolio and sort of combine traditional assets with crypto, and even use crypto to help you acquire those diversified assets, those tools exist now, right? And like we offer it on our platform. Again, not in the US, the UK, and the EU, but we operate in 180 markets around the world, right? So plenty of places around the world you can do it. So I think it's really quite soon that consumers, certainly in the US, will have access to it.
Thanks, Lane. A lot of very useful insights and deep insights. I have last two questions to wrap up. So obviously, BTC is remaining to be the main cryptocurrency, and despite evolution of many others, BTC has shown its strength and its operability, and it's kind of a mean to support the entire blockchain industry. It is famous for its 4-year cycle, ups and downs, and some experts say that that was in the end of the year of 4-year cycle for Bitcoin. Some say that it will repeat itself again and again. So what's your view, personal view on this as an expert? Is it the cycles must have, or there is a way to eliminate them? And what do you think, your prediction of the next wave?
Yeah, there is a lot of, I think, theory about, the Bitcoin cycles. And we've had 4 now. And they roughly have been around every 4-ish years. So the 2 things are true. One is the cycles are actually getting shorter. And then the second is the volatility is getting smaller or lower. And so I think, we should expect to see another crypto down market. And, we think that just based on market directionality, we probably see that sometime next year. Except pretty much every economist in the US is saying that, we'll see a macro slowdown towards the middle of next year. And generally, if everybody is saying the same thing, it's wrong. And then it's hard to juxtapose that with JP Morgan today has a $170,000 price prediction for Bitcoin for next year. So I don't know what's correct. Don't have a crystal ball. But in general, I do think that, crypto market cycles will continue. The super cycle idea is real. But, we have now seen the longest period ever of Bitcoin basically staying within kind of like a 10, 15% range. And so, I think that is probably the new norm. And so we shouldn't expect the next, crypto market crash to be the same level of market drawdown that we saw in 22, 23. I do think that was probably a little bit more extreme and maybe a bit more artificial because of the collapses that happened with it, right? So Terra Luna's collapse, followed by the FTX collapse and, multiple other crypto companies, Celsius going under, BlockFi going under, that was unique. And I think the fact that so many consumers were harmed as a result of that really did cause the trough to be much deeper than it'll be in the future. I can't say that there won't be other crypto companies to collapse in the future, but I do know most of the companies that didn't have a solid foundation to their operations and weren't real businesses have since disappeared, right? And so the ones that exist today, for the most part, are real businesses. They may be our competitors, but that doesn't mean they're not real businesses, and we don't actually believe in what they do. So I do think the next market crash will not be as severe.
Yeah, and I totally agree with you that those who already passed through so many crises over years, they know how to survive, right? That's the beauty of being in that already. So you learned how to actually put enough reserves and energy into kind of saving company. And I'm sure blockchain had a lot in its DNA that protects it from failure in whatever future crisis is to come. And every crisis is a sort of an opportunity for those who survive, right? I think this overall like winter market, venture market from like mid 2022 until almost now, except for like AI companies, will evolve into like great companies to be born out of that crisis. So those who survive will thrive for sure. It's like the law of evolution in a way that if you survive through like extreme, you can really benefit from that. Yeah. So my last question, Lane, and it was exciting conversation. If you may give us like one piece of advice to founders who start their businesses in highly regulated industries and environments, or what would you advise? You are one of the best experts who has built Uber, who has built blockchain in very sophisticated, highly uncertain and regulated environments. So what's your advice to newcomers, founders who pursue these opportunities?
No one's ever asked this question that way before, so I appreciate the opportunity to answer it. When I went to Stanford to go through their VC program, and through the program you come up with a thesis on if you're going to build a fund, what is the thesis of the fund? And then I did build a fund, and my thesis was my ability to de-risk regulatory opportunity and opposition. Which I uniquely was able to do with the people I was working with, and that most people can't. And so my vertical on what we were investing in was purely just companies that had opportunity or obstacles on the regulatory front. And so I think, for founders who are entering one of those two, right, regulatory opportunity or arbitrage or opposition, I think it's critical to make sure you've got expertise sitting on the back end. And one of the ways to do that is just like getting advisors who've worked in and around politics. I'm not advocating for myself at all. I'm beyond that now. But I think there's a good crop of people who have worked in and around politics. It's how they lived their lives and sort of built their careers, who can help de-risk what it is you're trying to do and figure out how to get you to success quickly. I remember when I was on my journey post Uber, and I would spend my Friday nights. This is terrible that I was doing this, but I would spend my Friday nights looking at all the portfolio companies of the various venture firms in the Valley, right? So I would just click on every single one of their portfolio companies to read about what they were doing. And I remember I found a company that it was like an Airbnb for restaurants, right? So you could like open a restaurant in your house. And I was like, oh my gosh, like the number of regulatory problems we're going to run into is immense. And so I reached out to the CEO, not because I wanted to work there, but I just wanted to find out more. And he had never talked to anyone who had worked in and around the political space and really had no idea how to get around some of the regulatory hurdles that were in front of him. And so I connected him with some folks so he could better scope that. So I guess, my advice is there's a lot of, free or just sort of equity only help available out there, and get it sooner rather than later, especially if you're going to try and take on regulators.
A very good advice. And we need definitely, and you said you're not advocating for yourself, but we need more people like you, Lane, who are trained lawyers, smart and creative, and who want to help technology leaders to find a way in this sophisticated and ever-changing environment. And well, I think that was like really fantastic conversation, Lane. Thank you so much for being with me. So this was Lane Kasselman, president at blockchain.com, and Viktor Arlovsky, managing director, managing partner at R136 Ventures. And this podcast was brought to you by R136 Ventures. Please join us, Ventures from the Valley. Lane, it was like really amazing, very insightful. And I learned a lot through this discussion. Thanks for being with us.
Victor, thank you very much for the opportunity. It's good to speak with you.
Thank you.